Welcome to another Forex trading beginner class. As always, I remain your facilitator for this program, and my name remains Halilu. Yes. So today's topic is going to be about types of charts. Now let's move on and move into our topic for this video. So, three types of Forex charts and how to read them. So in order to study how the price of a currency pair moves, you need some sort of way to look at its historically and current price behavior. A chart, or more specifically a price chart, happens to be the first tool that every trader using technical analysis needs to learn. A chart is simply a visual representation of a currency's pair price over a set period of time. And here is a chart showing us our uptrend in blue line, downtrend in red line, our breakaway or consolidation in black line, or sideways trend. Depends on whatever broker or whichever term you want to use. Consolidation, sideways trend, so many other names. So it visualizes the trading activity that takes place during a single trading period, whether it's 10 minutes, 4 hours, 1 day, or a week. Any financial assets with price data over a period of time can be used to form a chart for analysis. Price changes are a series of mostly random events, so our job as traders is to manage risks and assess profitability, and that's where charting can help. Charts are user-friendly since it's pretty easy to understand how price movements are presented over times, since it's so visual. With a chart, it is easy to identify and analyze a currency's pairs movements, patterns, and tendencies. In the chart, the y-axis, which we call the vertical axis, represents the price scale, and the x-axis, which is the horizontal axis, represents the time scale. Times are plotted from left to right across the x-axis. The most recent price is plotted furthest to the right. Back in the day, charts were drawn by hand. Fortunately for us, Bill Gates and Steve Jobs were born and made computers accessible to the masses. So charts are now magically drawn by software. So what does a price chart represent? A price chart depicts changes in supply and demand. A chart aggregates every buy and sell transaction of that financial instrument, in your case, currency pairs, at any given moment. A chart incorporates all these news as well as traders' current expectations of future news. When the future arrives and the reality is different from those expectations, price shifts again. The future news is now known news, and with this new information, traders adjust their expectations on future news and the cycle repeats. Charts blend all activity from millions of market participants, whether they are humans or algos, that's algorithms. Whether the transaction occurred by the actions of an exporter, a currency intervention from a central bank, trades made by an AI from a hedge fund, or discretionary trades from retail traders. A chart blends all this information together in a visual format. Technical traders can study and analyze. So types of price charts. So let's take a look at three most popular types of price charts. We have the line charts, the bar charts, and the candlestick chart. Now we'll explain each of the Forex charts and let you know what you should know about each of them. Let's start with line chart. A simple line chart draws a line from one closing price to the next closing price. When strung together with a line, you can see the general price movement of a currency pair over a period of time. It's simple to follow, but the line chart may not provide the trader with much detail about price behavior within the period. All you know is that the price closed at X at the end of the period. You have no idea what else happened. But it does help the trader see trends more easily and visually incorporate the closing price from one period to the next. This type of chart is usually used to get a big picture view of price movement. The line chart also shows trend to best, which is simply the slope of the line. Some traders consider the closing level to be the most important or more important than the open, high or low. By paying attention to only the close, price fluctuations within a trading session are ignored. Here an example of a line chart for Euro USD. So this is how a line chart looks, but here's an example of it. This is your example of line chart, and you can see the trend generally. You can now pick your points of your high, your lows, and you can see where it's going on an uptrend. Now let's talk about bar charts. Unfortunately, this is not a chart at a bar. A bar chart is a little more complex. It shows the opening and closing prices as well as the highs and lows. Bar charts help a trader see the price range of each period. Bars may increase or decrease in size from one bar to the next or over a range of bars. The bottom of the vertical bar indicates the lowest traded price for the time period, while the top of the bar indicates the highest price paid. The vertical bar itself indicates the currency pair's trading range as a whole. As the price fluctuations become increasingly volatile, the bars become larger, and as the price fluctuation becomes quieter, the bars become smaller. The fluctuation in bar size is because of the way each bar is constructed. The vertical high of the bar reflects the range between the high and the low price of the bar period. The price bar also records the price opening and closing prices with attached horizontal lines. The horizontal dash on the left side of the bar is the opening price, and the horizontal dash on the right side of the close is the closing price. So here's an example of a bar chart for Euro USD. First of all, let's look at the bar. How it looks like. This is the digital bar, and these are the bar chart. For that same chart, from the line chart, these are the bar chart we have. So we're still using the same chart. If you remember, this is how the bar line chart looks, something like this. But now we're now seeing the highs, the lows, the open and the close of the bar chart from the range of the price movement. Now let's proceed. Take notes. Throughout our lessons, you will see the word bar in reference to a single piece of data on a chart. A bar is simply one segment of time, whether it is 1 day, 1 week, or 1 hour. When you see the word bar going forward, be sure to understand what time frame is reference. When you see the word bar going forward, be sure to understand what time frame it is referencing. Bar charts are also called OHLC, which means open, high, low, close charts, because they indicate the open, the high, the low, and the close for that particular currency pair. A big difference between a line chart and an open, high, low, close chart is that the open, high, low class chart can show volatility. Here is an example of a price bar again. So let's explain what this four mean. The open. The little horizontal line on the left is the open price. This is when at that particular time frame, this is what the currency opened with, the price opened with. The high, the top of the vertical line defines the highest price at the time period. Low, the bottom of the vertical line defines the lowest price of the time period. Close, the little horizontal line on the right is the closing price, which means at the end of that time period, this was the price the currency closed with. Now, the third types of chart is the candlestick chart. The candlestick chart is a variation of the bar chart. Candlestick charts show the same price information as a bar chart, but in a prettier graphical format. Many traders like this chart because not only is it prettier, but it is easier to read. Candlestick bars still indicate the high to low range with a vertical line, However, in the candlestick charting, the larger block or body in the middle indicates the range between the opening and closing prices. Candlesticks help visualize bullish or bearish sentiment by displaying bodies using different colors. Traditionally, if the block in the middle is filled or colored in, then the currency pair closed lower than it's opened. In the following example, the filled body is black. For our filled blocks, the top of the block is the opening price and the bottom of the block is the closing price. If the closing price is higher than the opening price, then the block in the middle will be white or hollowed or unfilled. We don't like to use the traditional black and white candles. They just look so unappealing. First of all, let me show you the traditional candlesticks. So this is it. We have the upper shadow, lower shadow. The lower shadow is what we call when the price close with the low. The real body is your when price open and when price closing for the white candlestick or the hollow candlesticks or unfilled candlesticks. And now for the black candlesticks or your filled candlestick, the open price is at the top while the close price is at the bottom, which means price closed lower than it opened. Let's proceed. And since we spend so much time looking at charts, we feel it's easier to look at a chart that's colored. A colored television is much prettier than a black and white television. So why not splash some color on those candlesticks charts? We simply submitted green instead of white and red instead of black, or substituted green instead of white and red instead of black. This means that if the price closed higher than opened, the candlestick will be green, and if the price closed lower than it opened, the candlestick will be red. In other lessons or later lessons, you see how using green and red candlesticks will allow you to see things on the chart much faster, such as uptrend and downtrends and possible reversal points. For now, just remember that on Forex charts, we use red and green candlesticks instead of black and white, and we'll be using these candles or these colors from now on. So check out these candlesticks. Forex trading style. Oh yeah, we know you like that. As you can see, this is how it will appear. Now you can see the difference. The green one is for the unfilled part, while the red one is for the black candlesticks. Here is an example of a candlestick chart of Euro USD. Isn't it pretty? Now this is the same chart from our line chart and our bar chart, and now you can see the uptrend and downtrend. You can see when price closed higher and when price closed lower than their open prices. When price closed higher than the open price, you can see they are all showing green, but when price closed lower than the opening price, you can see showing red, and so you can see their shadows. The purpose of candlestick charting is strictly to serve as a visual aid, since the exact same information appears on the OHLC bar chart. The advantages of candlestick charting are candlesticks are easy to interpret and are a good indicator Let me take that again. Candlesticks are easier to interpret and are a good place for beginners to start figuring out chart analysis. Candlesticks are easy to use. Your eyes adapt almost immediately to the information in the bar notation. Plus, research shows that visual help with studying, so it will help with trading as well. 3. Candlesticks and candlestick patterns have cool names such as shooting star, which helps you to remember what the pattern means. Again, candlesticks are good for identifying market turning points. That's trend reversals from an uptrend to a downtrend or a downtrend to an uptrend. You will learn more about this later in our advanced class. There are many different types of charts available, and one is not necessarily better than the other. The data may be the same to create the chart, but the way the chart is presented and interpreted would vary. Each chart will have its own advantages and disadvantages. You can choose any type or use multiple types of chart for technical analysis. It all depends on your personal preference. Now that you know your candlesticks are so cool, why candlesticks are so cool, it's time to let you know that we will be using candlesticks Forex chart for most if not all, our Forex chart example on this site and video. Putting it together, there are several different types of price charts that traders can use to monitor the Forex market. Keep things simple as you begin reading price charts. As you find your chart preference, look for the proper balance of having enough information on the chart to make good trading decisions, but not so much information that your brain is paralyzed and can't make any decisions. Finding the right combination is different from every trader, so it's important to start with the basics before you start working on your way into using technical indicators, which we'll cover later in our advanced mentorship paid class. So this has been the end of part 9, and I hope you'll still stick around to see what we have more for you. Thank you for having a lovely day. But please don't forget you can contact me on any of the following handles: Facebook, YouTube, Gmail, Telegram, Twitter, and of course WhatsApp. I look forward to hearing from you guys. Thank you, thank you, thank you.